So welcome to chapter 6. We're going to spend this chapter talking about ways that we need to control cash and banking procedures, proper banking procedures in our business. So cash is the most misappropriated asset, and misappropriated is just a fancy word that we used for stolen. It's easily to steal, lose, mishandle cash. So we have a lot of controls that we need to put in place around cash. So internal controls is an entire system of procedures that we use in our business to safeguard all of our assets, not just cash, but all of our assets, and to promote operational efficiency. This is one of the things if you do go get an audit or you have to be audited that the auditors specifically look for are what are your internal controls. So again, internal controls are really designed to protect, safeguard all of our assets, our data, our information, everything. But we're going to specifically be talking about internal controls with respect to cash here. So with respect to cash, we want to make sure that what we call separation of duties so that we don't have one employee handling all the steps in a process. So for example, if you have one employee taking the cash, you want to have a different employee who's recording the cash receipts and maybe a different employee who's depositing the cash and then a different employee who's doing the bank reconciliations. I realize in a small business that's hard to do, but to the extent that you can, you want to try to have separation of duties, separate people assigned to each step of the process, because that makes it harder for somebody to try to cover up um, um, fraud, a misappropriation of cash. Ideally, we want to deposit all cash receipts daily into a bank. I used to work as an accountant at a small firm, and this was one of my jobs is I collected all the cash every day. I recorded all of it. Again, separation of duties would have ideally had someone else do that, but we had some separation of duties, and then I deposited all of the cash. Now, I wasn't the one collecting the cash, and I definitely was not the one doing the bank reconciliation. So we did have some separation of duties there. But every day on my way home from work, it was my job to go by the bank and deposit that cash. You want to make sure that all of your cash payments are made by check or credit card or debit card, but that way that you have a paper trail of it. Employee rotation is important. You want to make sure that we not only have cross-trained employees, but you don't want, when one employee is always doing the same job, it's too easy for them to figure out a way to cover up their tracks. You want to make sure that your checks, whoever is writing your checks, have to be authorized. So for example, I was the accountant at this small firm, but I did not have authority to sign checks. I had to go to one of our owners who to sign the checks every time. So I could write the check, but then I would have to take it to him and he would sign it and he would question me. What is this for? Blah, 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 blah. And I had to, if it was for a bill, I had to bring the bill. I had to show documentation and prove what the check was for. And then very important that we reconcile our bank accounts monthly, or you may have learned this as balancing your bank statement, and that's a process we're going to look at in a later video. But very, very important that we are doing that, making sure that what came out of the bank matches up with our records. So when we do deposit cash, we're going to fill out a deposit slip. Again, I realize that a lot of these banking procedures may seem silly now. Most of us deposit checks by using our phones. That's how I deposit checks. Just earlier today, I was paying bills and I deposited check by taking a picture of it and sending it directly to my bank account. But if I'm a business, I want to try to have, some more controls. So I may need to fill out a bank slip, a deposit slip, and make sure that I put on there the exact amount of currency, the check numbers, the date, the deposit slip has the routing number, so I'm certain that it's going to the correct account and all of that. Now, when we talk about check endorsement, now again, I realize many of us are not writing checks really anymore. In fact, some of you that are younger than me may have never written a check. You may not know how to write a check, but businesses do still use a lot of checks. So let's talk a little bit about check endorsement. So check endorsement is signing the back of the check. Even if you receive a check, you sign the back of the check. So the person receiving the check is what we call the payee. And the payee has the right to deposit that check, to cash that check, or to give that check. You could essentially sign it over to someone else. That's really not a good idea to do. It's technically legal to do, but it's really not a good idea. If you want to give that money to someone else, then it's better that you cash the check and give them the cash, or deposit the check and write them a new check. So when we talk about endorsements, a blank endorsement is just signing your name. Okay. A full endorsement is signing the back and indicating who this deposit is for. Now, again, I wouldn't recommend signing a check over to someone else. That's generally not a good idea. But I do recommend using a restrictive endorsement. So, restrictive endorsement is anytime you're depositing a check or you're endorsing a check, you put down for deposit only. And then you put your bank and your bank account number. That way, it can only be deposited in that bank. If someone were to find the check, they couldn't just go cash it or something like that. So mine will say, for deposit only, First Bank, account number 123456789, and then I sign my name, Jaye Simpson, underneath it, and that means that it can only be deposited into my bank account. So here's some, again, examples. The blank endorsement is just signing your name. The full endorsement is signing it over to someone else. Again, I wouldn't recommend doing that. And then that restrictive endorsement says, hey, you can only deposit this into my account. So let's do some journal entries to record deposits. So when we receive cash as the result of a sale, so we sell something, a good or a service, and a customer pays us with cash, then we would want to deposit cash and we would credit sales or revenue or whatever we're calling our revenue account, whether it's a fees account, an income account, whatever we're calling it. So again, remember, cash is an asset, so it has a normal debit balance. So if I am receiving cash as the proceeds of a sale, then I would debit cash and credit sales. It's been a bit since we've done a journal entry, so remember that debits are always listed first, credits are always listed second, and they are indented. So again, notice that little indentation there. And then you have your debit amounts in your first column and your credit amounts in your second column. Make sure that debits always equal credits. Now, let's say that we collected some money as a part of accounts receivable. So let's think back to this. So here we sold something on account. So we debited accounts receivable and credited sales. And now that customer is sending us a check and paying us. So we would debit cash and now credit accounts receivable. Remember, accounts receivable is an asset. So when we credit accounts receivable, we are reducing that asset. We're saying, hey, this customer owes us less money now because they have paid us. Now, credit cards, we may accept credit cards as a source of revenue. This certainly makes it easier and makes more customers perhaps willing to buy from us. The drawback is that the credit card companies charge us a fee for accepting their card. Typically, it's around 5%. I've been told that American Express has the highest fee, and that's why there's a lot of places that don't accept American Express. So, for example, if we sold something for $100 and the customer charged it on their credit card, we would only receive $95 from the credit card company. When Visa or MasterCard or whoever paid us our money, we would only get $95 because they're going to keep a percentage of that. So here we can see in this example, we sold something worth $1,000, and so we debited cash for $985. We notice we credited sales for the full, this is the full selling price, but we're only debiting cash for the $985 that we're actually going to receive from Visa or MasterCard or whoever. And then that $15 service charge we'll call service charge expense. Now, we are so certain that we're going to get our money from Visa or MasterCard, and we're going to get it probably very quickly, that we're going to go ahead and call it a cash sale when the customer uses their credit card. Even though technically we didn't get the cash immediately, we're going to get the cash, maybe in a few hours, maybe tonight, maybe tomorrow at the latest. But we're going to go ahead and call it a cash sale. Now, when we are writing checks, when we open a checkbook and we are writing checks, the drawer is the one that is writing the check. The drawee would be the bank, and the payee is the person that you're giving the check to. So once a check has been given, it's been deposited or whatever, that's called a canceled check. Um, and so that can't be used anymore because it's already been paid. It's already been processed. So here's just an example of a check for those of you who may not quite be familiar with it. You're going to put the date, very important. You're going to write who the payee is, who you're writing the check out to. You put the amount both in numbers here, and then we write out the amount in words here. It's important that those match. If they don't, the bank can refuse the check. Very important that you sign at the bottom. And then the memo line. The memo line is important also. I would advise you, especially from a business perspective, get in the habit of filling out that memo line. What is this for? Office supplies or whatever. It's going to, again, make it easier when your accountant is going back and reconciling and doing the entries to know exactly what this check was for. Also pre-printed on the check will be the check number, the routing number, your account number, all of that information. You may have duplicate checks where as you're writing a check, it's recording a copy of it underneath, or you may have a check stub where you would fill out that information so that you have a copy of it once you give the check to the payee. So here we can look at our company records and we can see that we made some deposits. And we have our deposits that we made on April 1st and 4th and 15th and so on and so forth. And then we see the checks that we wrote. We have the check numbers that we wrote. We have the who we wrote them to. We have that description, that memo line. This description would really, again, be your memo line on there. And so we know exactly how much we had. $6,446 of deposits. We wrote checks of $25.29, and so that leaves us an ending balance of $39.17 in our account. So again, that bank statement that we're going to get every month, and when we say bank statement, yes, you do get a bank statement from your bank every month, and you would go through and do a bank reconciliation, but also this same concept applies to your credit cards. So every month when you get your credit card statement, you need to go through and reconcile and do the same thing. I just did it this morning. I was paying bills and I got my credit card statements, and I personally, I don't have a small business, but I keep all of our personal finances in a computerized program, and keep all the receipts and I enter them in, so I always know exactly how much money we have and what we spent money on, and it makes it a lot easier come tax time also. And then I reconcile that statement every month for my bank accounts as well as every one of my credit cards, so I can see exactly what charges, deposits, checks were written, all of that kind of stuff. So here's a sample bank statement. This is for a checking account. And again, we can see it was written as from Oceanic Bank. We can see the date of all the deposits and the withdrawals. And then we can see our beginning balance, our ending balance. Notice we had a service charge on here. And then they give us what our ending balance is. So we're going to go back with our records in the next video and go through this process of reconciling our records with our bank statement.